Welcome to our weekly Forex forecast, and this is for trading for the week of October 5th to the 9th, 2020. First of all, just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. All right, so on Friday, yes, it was Friday early morning, we got the news that President Trump was showing symptoms. There were a few people in President Trump's team that were tested positive for the virus, and President Trump was one of them. So it sounds like he's doing okay. He should be released on Monday or in a couple of days. So he doesn't really have, he just has mild symptoms, which is good. Now, we did see a negative impact of that news on the market. So we did see that markets drop as a result of that. And the reason for this is because anytime there's uncertainty, markets don't like that. So markets want to markets don't want risk, or participants don't want risk. So now we are going into October here and getting closer to the election. So there's only 1 month left to the elections, and with that, generally there is an impact on the market, and especially right now, because this particular election is, with everything that's going on, is a big contest here, because we don't know who is going to win, and the markets can't quite predict that. And as a result of that, if we see anything that is out of the ordinary will have a negative impact on the markets. Now, there is a talk of stimulus bill being passed. So if stimulus is passed, true trillion-dollar package, that will be positive for stock markets, but it will be negative for the US dollar, because anytime there is more money injected into the markets, the currency price drops because of the increase in supply. So those are a couple of the main themes that we have to keep in mind as we go into November here. So expect volatility in the markets in October because of the upcoming elections in the US. All right, so other than that, going into this week here, we do have PMI numbers we have PMI numbers here for the Eurozone, and PMI numbers are important because purchasing managers index. So these are the people who are making purchasing decisions in regards to the stuff they are buying for consumers to buy. And if the purchasing managers expect the retail sales to be good, they expect people to be coming into stores and buying stuff, then they will buy more. So the positive numbers show that there is a question, it shows that there is a likelihood of more people coming in, and that's a positive thing. So these numbers tend to be important. If we see an increase, if we see the numbers either match these expected numbers or higher, that would be good for the euro. Actually, another thing that I forgot to mention, Brexit is also Brexit Talks. We had Brexit Talks all last week. Now, that is also very important. So as we are getting closer to the Brexit deadline, which is the end of the year, we are likely to see more volatility in the British pound because of the Brexit conversation. So if we hear comments that they are not close to an agreement, those type of comments will be bad for the pound. But if we hear that they are getting closer to the agreement, or they are agreeing on key points, any of such comments will be positive for British pound. So that's just another thing we need to keep in mind. And this will be outside of the data. So this is more overall overall theme. So we have they have Eurogroup meetings here this week as well. So very important to pay attention to the comments that come out of these because of the impact on the British pound and the euro. We also have PMI numbers here from the US. Same thing here. The numbers are looking good. So if we continue to see an uptick here, that will be positive for the US dollar here as well. And then we have RBA, Reserve Bank of Australia, cash rate here, not looking for a change at this point. I think they're likely to keep the monetary policy stable. Now, the comments around the outlook for the economy are the ones we'll have to watch. So if we see there are more they are concerned. If the bank here expresses concerns in regards to the growth, that won't be good. But any sort of positive commentary is likely to push the Australian dollar higher. So we heard from Bank of England, they actually said that recovery was better than they had expected, and any sort of comments like that will push the currency up. And as a result, we had seen pound go up. So if we see or hear similar things from a Reserve Bank of Australia, that will be positive for Australian dollar. We also have annual budget release here for Australia. And then we have ECB here, ECB President Lagarde speaking here a couple of times. So her comments, again, will be important because it will just show what their expectations are in regards to the economy, but also in regards to the Brexit, the way things are going, because central banks will play a role in that as well. So both ECB as well as what do you call it, our Bank of England. And then we have Fed Chair Powell speaking. Now, these comments, again, even though we have heard from him several times, market participants are always looking for something out of the ordinary that he hasn't said before, or a different way of putting it. So we have to keep an eye on this because it does make the market, or it does have an impact on the markets. So both the stock market and the US dollar. So other than that, we just have, we have FOMC this week as well. So again, important to pay attention here. Right now, not really expecting the Fed to change anything, especially so close to the elections. But again, it is always a commentary that makes a difference, or at least at this point, the commentary is very important. Because we are not really looking for them to cut rates or do any of those things. So it will just be more in regards to the forecast for the economy and the recovery where the focus will be. We also have Bank of England, we have Bank of Canada. So lots of central bankers this week. We'll just have to be mindful of the comments that come out of that. And then on Friday, we have employment numbers out of Canada, and that is that. Okay, perfect. So let's move on to our charts here. We'll start off with euro dollar. So with the euro, we see that price had dropped previously, and now it has pulled back here. Now the question would be, can it go through this resistance level or not? So if it doesn't go through, then we are looking for this continuation move to the downside. So for now, bias is neutral here, and I'm not super bullish on this at this point. I would look for the reaction at this 1.1770 or 1.1800 level here. And if the price holds below, I would be looking for that continuation move here instead of it shooting up. But should it go through here, then we are looking for price to basically go retest the high. So this level here, 1.1770, is a critical level for us to watch. As long as it holds below, I would be looking for a drop. So for now, I will be neutral. I'm neutral on this, and we will just have to see which direction it wants to go in. And should it go through, then we will more on the daily analysis, we will keep a track of it, and then we'll be looking at essentially back into this top of the range here. But for now, neutral bias for euro dollar, and we'll just mark that on the chart to keep an eye on that level. Pound dollar here, pound has been going sideways here for the last several weeks. So this is looking similar to euro dollar in the sense that price had dropped and now it's going sideways. So here we'll have to see which direction it wants to break out of this range. It is trading in a range at the moment for the last 4 weeks. So if price breaks to the downside, then we're looking for that continuation to the downside. So this is more of our flag pattern here. But if it goes through the resistance here, because it is into key resistance as well, So if it goes through, then again, we're looking for that move to the next level back into the highs. However, at this point, the setup is not quite there. Right now, we'll just watch the interaction here between the top of the range and the between the price and the top of the range and the bottom of the range. So we'll see whichever direction it goes in, that's the direction we will follow. But right now we need to wait for price to show us the hand as to where it wants to go. Right now it's sideways, it is neutral, and I will just leave these levels and we'll watch them on the daily again. Aussie dollar, again, this is very similar to our euro that we had talked about, the level that it's at currently. This is a key level here. As we can see, price has been interacting with this level or it has respected this level several times before. Now, same thing here, we had a nice drop through our support level here, and now it has pulled back. So if it holds below 0.720, we are looking for that continuation move to the downside. Now, expect a lot of volatility in the market because of the upcoming elections and depending on what happens with President Trump's health. If he gets better, it would be good. Markets will like that. Should, for some reason, there be complications, that would be negative for the markets. And when the stock markets drop, Australian dollar drops as well. If the stock market goes up, our Australian dollar tends to go up as well. So that's the correlation between the two. So we'll watch this level at 0.7200. If it holds below, I'm looking for a continuation back into the support at 0.6800. But if it breaks through this, then we are targeting the top here again into the resistance. So for now, we'll just keep an eye on this. This is looking like a pullback at this moment, but the pullback can turn into reversal should it go through this resistance. So neutral bias for Aussie dollar as well. New Zealand dollar, this is struggling with the support level. So as we can see here, price is into this major support and it has not been able to break through this level. Now with this as well, as we can see, price has pulled back to about 50% of the candle here. And again, this would be a good level to watch here. If price holds below 0.6660, then we're looking for a drop. But should it go through, it's right into the middle of the range right now. Once it passes this level, again, we are targeting the high back into this resistance level. So I would look for price to go through. So this week, it looks like we have seen a bit of a pullback in pretty much everything here across the board. And now it's at that level where we need to see whether the pullback is a pullback or it turns into a reversal. So watch out for 0.6660 level. Interesting number. All right, and then dollar CAD here, dollar CAD as well into an important support resistance level here in 1.3420. So with this one as well, if price holds below this level, so this is looking bearish at the moment, but as we can see, it's right into the support. So for this one, bias is bearish, and as long as it holds below 1.3420 level here, this is the type of move I am looking for. Again, if it gets stuck above 1.3250, then it can continue to the upside here as well. It's just right in the middle right now. What we could see is one of these as well, because again, price has gone through the resistance, pull back, and we could see a continuation. At this point, we will just watch these two levels here. And whichever direction price breaks into. So we don't want to get ahead of the price at this point, but we'll keep an eye on these. If it goes through the resistance, I will be looking for price to basically go into the next level there. And should it go through the support, we're looking for price to come into the bottom. It's right smack in the middle of that right now. So neutral to bearish bias for dollar CAD. Euro pound here, this one is looking bearish. We see price went through the support here. So bearish bias for euro pound. I would look for a pullback and then continuation to the downside here. So bias is bearish in terms of the target. First target is 0.8980, and then we're looking at 0.8920. With the euro pound, only thing to keep in mind here will be our the Brexit negotiations. So if the Brexit negotiations fall apart, or they're struggling in terms of reaching an agreement, this could turn around. So keep an eye on that. For now, based on just the technicals alone, this is looking bearish here, and the move that I would expect would be something like this. So bias is bearish for euro pound. Euro Swiss franc, this one is still sideways here. As we can see, price hasn't really done much. It's been stuck in this range for quite some time, and it is still stuck in this range. So I am just looking for that move from top to bottom. It rejected the high of the range. We may get one of these, but this is again range bound. So bias is neutral. Target is 1.0720. Pound Swiss franc here, we have seen this one go up. So at the moment though, today, not today, sorry, this week's candle close here is looking more neutral. Last week we did have this bullish pin bar, but this week it is looking neutral. And so this candle here is very similar to this candle. There is bullishness in it, so we can see a move to the upside into 1.2030 level, but it doesn't quite have the momentum. So this candle, for example, is very strong compared to this one here, and this week's candle is a little weaker. So neutral to bullish bias here. Next target would be 1.2030. Bullish bias. Dollar Swiss franc here. This one is also at an interesting level. This is similar to what we were looking at our dollar CAD here. So in this case, we see that price has gone through this resistance level, and we have seen this pullback. So now if it holds above here, we could see that next move to the upside. It is not confirmed at this point, though. We have to watch this level. If it holds, if it goes through it though, then we are basically back into the bottom once again. So right now, this week or last week was more about pullbacks. This week we should get either the reversals or continuation of the previous week's move. So from not last week, the previous week, we should see a continuation or a reversal of that. So right now, again, with this one as well, I'm just going to leave it here. If it holds above 0.9165, we are looking for a continuation to the upside. So that would be the first thing that I would watch for, pullback. And then if it holds, a continuation, and the target would be 0.93 and 0.9380. However, we'll watch this on the daily. If it drops through here, then we are targeting 0.90. So right now, neutral bias for dollar Swiss franc as well. Pound yen here, this one is looking bullish here. Now, concern here will be that it's also into strong support resistance level. And Brexit from here on out till the end of the year, expect volatility. With this one, what could happen is if it gets stuck here, we could see a reversal. But we do have a nice strong bullish candle close here. So the next target is 137.50. And then above that, we have 138.30. Again, we'll have to just watch the resistance. If it gets stuck, then we are looking for a drop. But should it go through, then it can basically, this whole candle can get filled. So right now, bullish bias, just with caution. Euro yen here, this one again is neutral here. We see for the last 2-3 weeks here, prices in this sideways range at the moment. So with this one, the test will be if it holds below this resistance level, 124.25 level. If it holds below this, then we're looking for a continuation to the downside. So we had seen this drop through this major level, and now we have a pullback. And this is generally our continuation pattern. So important level to watch again here would be 124.25, and we'll keep an eye on that. So right now this is neutral, this is neutral, so it's right into this important support as well, and it's struggling with this. So if it doesn't drop, it's likely to go higher. Right now I am neutral on this. I'm not, it doesn't show whether it's bullish or not at this point, so neutral. Dollar yen here, this one hasn't really done a whole lot this week. We have a neutral to bearish candle here. We see that price has been holding this downwards channel at this point. Hasn't really broken out of it. It's still intact. And as we can see, it's been bouncing here. So if it holds below 105.75, I will look for a retest of the support level here. So right now, neutral to slightly bearish, but it doesn't look like a strong move at this point. Target is 104.20. Aussie yen here, this is looking more like a pullback that we saw in some of the others. So euro yen, for example, here we see price had dropped through this level. It's holding. If it continues to hold, then we will look for a further move to the downside. However, it is into important resistance level and it doesn't look quite decided yet. So we'll have to see. Now on Friday, though things did get messed up because of the comments that came, or the tweet that came out that President Trump has the virus. And because of that, markets, there was jitteriness in the market, which may have changed things. So the end result being that we didn't really get a good bullish engulfing candle. Had we seen a bullish engulfing candle, we would have been looking for the move higher. But at this point, this is neutral. The level to watch will be 76.20, and should it hold, I would be looking for that drop. So right now, bias is neutral, and I am just going to leave these levels on the chart and we'll watch them on the daily. New Zealand yen, this is sideways at the moment. As we can see, price has been trading in this range right now and still hasn't broken out of the range. It was into support previous week, and now it's into interesting level here because it's right into this resistance. It's right in the middle of the range, just like New Zealand dollar. Right now, overall, this is range bound. So bias is neutral here. And the range boundaries that we'll have to keep an eye on will be 71.50 and then 68.72. So once it gets through this, I would be looking for a move higher right into the top of the range. And then if it doesn't go through, it can still come back into the range. This has been range bound since April of this year. So we may see a continuation there. So neutral bias for New Zealand yen as well. 71.50 will be the target once it gets through the 70.25 level. New Zealand, CAD yen here. This is again similar. This week's candle is neutral here, again into important resistance level. If it holds, we are looking for a continuation. So this is generally how continuations work. We see a drop, there's a pullback, and then if it holds below the pullback level, then we see a continuation of that move. Right now, volatile markets, so be prepared for the unexpected. But right now, this is looking neutral. 79.50 is the level we'll watch. If it holds below, I will look for continuation. So neutral bias for CAD yen as well. All right, so let's take a look at our commodities now. Looking at silver here. With silver as well, we are seeing this pullback at the moment. It is heading towards this resistance level. We have a small candle here, bullish candle. Again, not strong enough to have enough momentum for a change in the trend, but bullish nonetheless. So with this one, what we're looking for is, can it hold below 24.30 or even 24.60-ish level? So if it holds below that, then we are looking for price to drop. So right now, neutral bias with this one as well. This is a pullback. And if it holds below this 2460, we could still see a drop. The only thing here would be, this is quite a drop. And when we have a big drop like this, we can get further pullback here. So it could pull back all the way into the support level here, and that could act as resistance. But for now, first we'll have to look at this 2460 level. If it holds, then we're looking for a move back towards 2160. So between 2460 and 2160. Again, we'll watch it on the daily here. Gold here, gold also pulled back, but again, and this one's pulled back the way we talked about here, what silver can do. It can go all the way up there. Now, gold here is at an interesting level. So this is an interesting level that we'll have to keep an eye on. So we'll watch it here. With this same thing, we had seen a drop, and now we are seeing pullbacks. And if it holds, we would look for a drop here. So 1920 will be the level to watch. If it holds below 1920, we're looking for a continuation of that move lower. So right now, this is in neutral territory. And once we see which direction this wants to, if it holds on the other side, then we are going all the way into 2000 here, or 1999, so 2000. But if it holds, I would be looking for that drop. So for now, neutral bias for gold as well. All of these are neutral right now, except for gold. I mean, oil, my apologies. Oil has dropped. So oil has done this move that we were talking about on the other pairs. So here, what we see is price dropped, pulled back, and dropped. Now, if it breaks through the support, I'd be looking for this continuation. It does look bearish, so bias is bearish here. Next target here would be 34.35. So bearish bias here for oil back into the support at 34.35. That's what we're looking for. Copper here, copper has been very volatile, big drop and then a pullback here. So this is this has been quite volatile, as we can see. Neutral at the moment. The candle body is complete. So the candle here is not very strong candle because of that whipsaw back and forth. So neutral bias at the moment, and we will again look for the top and the bottom at this point. So we need to see which side it wants to break in. So neutral bias for copper. Bitcoin, I don't have the weekend numbers, but this one is also range bound. So it's like the entire market is just in this wait and watch mode. We do see that it's holding below the 11,000 level. So chances are we are likely to see a drop back towards this 10,000 because it looks like it's holding. So we will take a look at that. 10,000 is the target for now. But it is range bound between 10,000 and 11,000. So bias here is neutral to bearish for Bitcoin. So looking for a bit of a move to the bottom here. All right, let's take a look at our stock market here. Stock market has been back and forth, starting with S&P 500. And here, what we have is, again, price had dropped. It's pulled back now, and it's into important resistance level here. So with this one, if it holds below 33, so 3,400, we'd be looking for this move back towards the support here. So neutral bias here, target would be 3,200, but that's if it holds below 34. Should it go through, then essentially we're looking for move back towards the highs. It would be interesting. Generally, we would not see very, very bullish move ahead of the elections. However, these elections are these are just interesting times right now. So we can expect strange things can happen. So things that we'll have to keep in mind. One, the uncertainty around the elections is likely to have a negative impact on the market. However, if that stimulus package gets passed, that will have a positive impact on the market. So those are the two things that are basically working in the opposite direction to each other. We'll have to see which one goes through prior to elections, and that is where the sentiment will go. So right now, neutral, looking for a move back towards 3,200 here. Nasdaq, this is looking bearish here. We see price went all the way into the resistance here and it has dropped. So we have a pin bar looking bearish at the moment. So I'm looking for a bit of a pullback and then a drop back towards 10,700. So bearish bias for Nasdaq. And then in terms of Dow Jones here, this one has also done a pullback. And now the question will be, can it hold below this 28,000 or can it go through that? If it holds here, then looking for a move to the downside, back into the support, 26,750 here. So neutral bias at the moment. And we'll keep an eye on this $28,000 level to see which direction it wants to continue. So neutral bias for Dow Jones. DAX here, this one also looking neutral. The candle is completely neutral and we are seeing the similar thing here as well. Price dropped, pulled back, and if it holds, we would be looking for a continuation here. So bias right now is neutral. As long as it holds below this 12,870, I will look for a move towards this lower level. So I'm just going to leave them here for the time being. So pretty much everything is up in the air. It seems this week. This again, completely neutral candle here. Overall, it is slightly biased to the downside. So if it holds below the 59.80 level, then we are likely to see this move to the downside. So I'm just going to leave it here for now. This one has been stuck in this little range for a little bit here for the last several weeks, actually. So we'll see how that plays out. So neutral bias for FTSE as well. And same thing here with Nikkei. We see it's stuck in this range for several weeks. Again, at this point, this week's candle has a little bit of bearishness in this, not looking super strong in terms of being a bearish candle. It's right into the support. And it's stuck between this support and resistance. So this has been range bound for the last several weeks here. It did try to break through, but then pulled right back in and no real direction at this point. So neutral bias here, depending on whether it, if it breaks through the support, then I will look for this 22,600 level. Otherwise, we are going back towards the top of the range. So neutral bias for the time being. All right, so there are some questions here. So Aussie Yen and Aussie New Zealand looking short. If the stock market drops, then those trades should be good. And what other question? What icon is that inverted C in the bottom? I am, Dan, can you expand on that, please? What inverted C? Are you talking about the indicator that I have in the bottom of my screen, like for some of these other ones? Are you talking about this one? That's a Hawkeye indicator. It's a volume indicator. And then what else? So let's see, there's a couple more questions here. So if the trade doesn't reach the profit target, how do you decide when to exit the trade? The way there's no particular indicator for that, just price action. If it's just struggling, chances are it's going to turn. So it's best to just take the profit, especially these days right now with the volatility in the market, and especially when going into our towards the elections here, I would be expecting more volatility. So best to take profit. It's better to take the profit and not take the full size of the profit, but it's better to just take profit. Question here, am I right in saying it's the big banks that control FX? It is always the big players that control all the markets. Retail traders, no, we have absolutely no influence in what's going on. So this is why we take a look at what the market is doing, and our job is to align ourselves. It's like a big ship going in a certain direction. We can follow in its wake, That's the best we can do. We cannot have a fight with that ship because we'll get crushed. Retail traders have absolutely no influence on the market. Forex market is trading is the big institutions, and then the Forex market has more influences on it. So because it's currency exchange and we have such what do you call it? We have such the trade that happens between the different countries that influences the Forex market, but not the retail traders. Oh, these are just my icons. Sorry. Okay, that's what you were asking for. Yes. Question here, participating in the Turning Pro Challenge. If you want to join the Turning Pro Challenge, you can definitely do that. The Turning Pro Challenge basically is you get my trading course. You will get the Learn to Trade Forex course. We will be doing live training sessions every Tuesday though. So you'll get this, plus you will get live training from me every week. So we'll go over price action. We'll take a look at a few indicators, some of the ones that I like, but yeah, so you will get all that education in regards to how to trade. But the important thing here also is you will get access to my Trade Vault, which is basically you'll join me for daily market analysis calls that we have every day, Monday to Thursday in the evenings. You can join the live call like we are doing right now here. And then you will also get a spreadsheet from me, which will have all the targets and everything. So it's an at a glance information. And we go through a lot of different Forex pairs. So generally when I do my free video, I only post the US dollar crosses. In the daily market analysis, we go through Swiss franc, yen crosses. We also go through some of the other like Aussie, Euro Aussie, Pound Aussie, those crosses as well. So we do in-depth market analysis every day. And of course you get the entry, so the entry, the pullback levels and the profit targets that we discuss in that. You will be a part of a private Facebook group where you will have access to me. We do a coaching and accountability call every Friday to check in, and this is where you can get support from me. If you have any questions, if you want to trying to figure something out, I am there to support you. Now we are starting the challenge part of the Turning Pro Challenge. So this is more the learning stuff. The challenge is to develop consistency in your trading. And I did post a video on the YouTube channel if you want to take a look at that. So basically you get to choose how many pips your target will be for the week. And the idea is that we are going to stay consistent with that target. And if you go through that video, you will see how just making 50 pips a week, if you can hang on to that profit, what a incredible return it can produce for us. And I find a lot of times people just go, we go in, we make a lot of pips, and then we give back more pips than we make. So with the challenge part, we are trying to do the opposite of that. We want to make the pips and then we stop when we hit our targets, or we just scale right back down. So we're not giving them. So if we just stop giving back the profits, we would be so much more successful. And that's the point of the whole, this Turning Pro Challenge. And this is where I'm trying to sweeten the deal a bit for everybody, because I want you guys to or anybody who participates in the challenge, I want to make sure that I support you. And one of the ways is by dangling. It's a carrot and the stick. I don't have a stick for you guys, but we have a carrot. So you can essentially fund your account. This is money that will go to the winners. We'll pick 3 winners based on your results. So it can be a demo account, it can be a live account. All we're trying to do is so you will become more successful, plus you have a chance to win prizes. So you have, first prize will be $3,500, second prize $1,500, third prize $500, and this will be no strings attached. You don't have to trade with my broker. This is just the money that you can win. So this is just my way of trying to, because I've tried these challenges before and people started and then they don't really follow through. So I'm trying to make sure that we stick to the plan. And the challenge runs from October 5th to December 20th. So right before Christmas. So it can be a good Christmas bonus here. So if you want to join me, you can go to tradingwithvenus.com. the discount is not available anymore because it was before we were actually starting. So now it is $9.97, but you can go to tradingwithvenus.com/courses and you will be able to join again. So if you are interested in it, please go join. We are going to start on Monday. So yeah. Perfect. So that's it for today. Have a wonderful trading week. And I will see you guys next on Monday again. Bye for now.